Welcome to ExecFit Audio. The portal is created to improve board and executive performance. Are you aware that you can improve and add value to your organization by listening to the content on this platform? We have benchmarked our topics with leading practices and global trends. Make sure you have your volume up and that you have your notepad and pen to make notes. Thank you for your audience. Please enjoy that topic that follows. Audit Committee Leading Practices and Trends. The following is a list of certain leading practices for audit committees. It is not all-inclusive, but it can be used to help assess audit committee practices and to discuss agendas and other considerations. 1. Committee dynamics. Focus on committee composition, including independence, financial expertise, risk management, broad business or leadership experience, and succession planning. Limit the number of audit committee members to 4 or 5 to optimize effectiveness. Conduct an annual committee self-evaluation. Consider periodically rotating audit committee members, including the chairman. Encourage discussion, rather than presentation, at meetings. Participate in audit committee education activities. Engage independent advisors when needed. Meet at least quarterly, or more frequently as circumstances dictate. Maintain appropriate coordination with other board committees. 2. Self-assessment and evaluation of effectiveness. Review and approve the audit committee charter and align activities with a calendar that incorporates required activities and allows flexibility for additional topics. Develop meeting agendas in consultation with management. Resist the urge to repurpose existing agendas without discussion. Align audit committee meeting materials and agendas with priority areas. Distribute briefings and other materials well in advance of meetings. Reports should include executive summaries that highlight issues and critical discussion points to allow for discussion versus presentation during meetings. Manage meeting attendees to allow open and candid discussions. Perform a robust self-assessment annually. Discuss the results of the self-assessment with the audit committee in an executive session and develop tactical actions to address findings. 3. Oversight of internal controls, financial reporting and integrated reporting. Understand key controls and reporting risk areas as assessed by financial management, the internal auditors, and the external auditor. Emphasize oversight of corporate taxes, an area where high risk and big money decisions are made. Leverage the value of internal controls beyond compliance. Consider levels of authority and responsibility in key areas, including pricing and contracts, acceptance of risk, commitments and expenditures. Understand complex accounting and reporting areas and how management addresses them. Understand significant judgments and estimates used by management and their impact on the financial statements, such as fair value accounting and related assumptions. 4. Risk oversight. Focus on financial risks, fraud risk and other risks that may affect the integrity of external reports. Increase the focus on risk oversight and assessment. Avoid becoming overly dependent on forms or tools for monitoring risk. Periodically reassess the list of top risks, determining who in management and which board committee is responsible for each. Evaluate information technology, IT, projects, with a focus on financial reporting, including IT milestones and reporting against them, especially for IT transformation. Have appropriate leaders in the business make a presentation at a board or audit committee meeting to enhance the members' understanding of the business and risks and to evaluate the depth of talent effectiveness. 5. Interaction with the external auditor. Exercise ownership of the relationship with the external auditor. Get to know the lead partners and meet periodically with specialists, such as tax, IT, actuarial, regulatory. Establish expectations regarding the nature and method of communication, as well as the exchange of insights. Engage in regular dialogue outside the scheduled meetings. Set an annual agenda with the external auditor. Focus on the external auditor's qualifications, performance, independence, and compensation, including a pre-approval process for audit and non-audit services. Provide formal evaluations and regular feedback. 6. Partnership with the CFO and other management. Focus on the tone at the top, culture, ethics, and hotline monitoring. Conduct annual evaluations of the CFO. Engage in the identification of potential issues. Understand plans to address new accounting and regulatory reporting requirements. Provide input to management's goal-setting process. Discuss succession planning for the CFO and staff. Conduct pipeline and staff reviews, including identification of high-potential personnel. 7. Executive, private sessions. Audit committee meetings should be preceded or followed by private sessions with the CFO, the internal auditors, and the external auditor. Use an executive session for committee members to discuss how the meeting went and to identify agenda topics for future meetings. Discuss succession plans for the finance organization with the CEO and CFO annually during a private session. Establish expectations as to what sort of topics and discussions are expected of the external auditor in private sessions. 8. Executive compensation. Coordinate with the Remuneration Committee on incentive compensation goals. Work with the Remuneration Committee to understand the implications of the incentive structure, including its impact on employee retention and potential increases in fraud risk. Increase focus on the compensation of officers and directors, including the appropriate use of corporate assets. 9. Interaction with the internal auditors. Ensure that the internal auditors have direct access to the audit committee. Consider having internal audit report directly to the audit committee and administratively to senior management. Play an active role in determining the highest and best use of internal audit, as well as the appropriate structure of the group, such as in-house versus outsourced resources. Be involved with the internal audit risk assessment and audit plans, including activities and objectives regarding internal control over financial reporting. Conduct annual evaluations of the Chief Audit Executive. Understand internal audit staffing, funding, and succession planning, particularly the adequacy of resources. Consider performing peer benchmarking to compare relevant metrics. Thank you for listening to ExecFit Audio. We appreciate it and value your support. Should you need assistance at your organization, please drop us an email or visit our website. If you have any topic suggestions for us, please drop us an email as well. Our email address is info@execportal.co.za. Our website is www.execportal.co.za. Please continue to enjoy more content on our platform.